Jerry Gidel is ready to talk about and explain all things related to the USDA report right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, to summarize, you are seeing stronger corn feeding and smaller soybean crop. Is that what you're seeing?
Well, I think there's the U.S. corn feeding was higher than expected in the spring. I think it's going to continue to show a stronger usage. Basically, it's because of the fact that the USDA's quarterly stocks reports is really the barometer for U.S. corn feeding. It's not specifically the same in soybeans because it's soybean meal feeding is measured in the crush and also the exports. So that's a little different animal than the corn side. But because of the fact that a significant portion of the U.S. corn supplies are fed sometimes off a farm, sometimes locally, sometimes it's trained to the plain states, things like that, and it doesn't really go through a commercial type of operation to really measure. So it's really measured by the reality of the quarterly grain stocks that we have, and that's the big feature we're coming up with this coming week. On a week from today, we're going to go ahead and get the USDA's latest September 1 quarterly stocks from there, and that's really the final stocks, by the way, for corn and soybeans. So that's we've had some pretty interesting and pretty erratic type performances on the final stocks versus trade expectations here over the last 4, 5, 6 years, partly on the combination of quality of crop, partly on unexpected type of movements by train that weren't really picked up in the exports to like Canada or Mexico in the past, and potentially even an overestimate of the size of the crop. As we go through the year, we kind of take a peek at all these various stocks along the way. Of course, there's one in December, one in March, and one in June. And the June one this year, particularly, was pretty surprising on corn from the reality of the fact that having a number 150 million bushels higher than the previous year, when the two previous reports in December and March were off significantly because we had a very small crop, and also the fact that sometimes when the producers marking things down for the government earlier in the summer, earlier in the year, he kind of looks at the side of the bin and knocks on it and figures out this is how many bushels I have. Well, as you get down to June, you can pretty well figure out where you're at and how many bushels you still have in the bin and how much has been moved through the commercial channels. I think there also was a fear going on here within the major U.S. cattle feeding industry in the plains that things could get pretty interesting for them and very expensive for corn if we didn't have a very good growing season. And to some extent, when you're staring at things back in March and April out there in the plains, things look pretty bleak. There finally was some rains that did show up late April and into May that helped stabilize particularly the crop potential in Oklahoma and Texas, parts of Kansas. Kansas never really got a great saving rain like the other two did, but that's the huge part of the U.S. cattle feeding industry. Of course, there's Nebraska and Iowa, along with Oklahoma and Texas and Kansas. But I think that's part of that was people looking ahead and making decisions that they wanted to have supplies on hand versus anticipating getting a cheaper price in the summertime. But at the same time, that could also indicate that the USDA's estimate of last year's corn crop could also be overestimated. And it has happened where we've had situations like that happen. Corn is not as likely for a huge change in crop sizes, primarily because the fact that the feed usage number has the residual built in, as we just talked about. It's not a it's determined by the fact of how much is exported, how much is processed, and how much is left in the bin or in the stocks report. That's how much we fed. So it's a residual type of determination. So it makes it an interesting factor. But I kind of feel like that that this summer situation, we should see reduced numbers of corn usage because of the fact that our cattle on feed numbers have been running anywhere from 2.5 to maybe as much as 3.5, 4% lower on certain months back through the spring and early summer. And that primarily because the fact we just ran out of cattle to put in the feed yard. Last year, we stuffed a whole bunch of ones in there that couldn't be left out on the plains, on the pastures and that, because there was no pasture. This year, as we just mentioned, we talked about rains in the southern plains in Oklahoma and areas, and even to some extent in the feeder cattle areas of the northern plains. You could keep the cattle out on grass and keep them going. Last year, it wasn't the case from that standpoint. So we don't have as many cattle in the feed yards as we had, which should reduce our feed usage for the coming year or the coming quarter. And to some extent, it's going to be interesting going forward here on the coming year's feed demand. But the USDA has been using a number of 5.425 billion bushels for quite some time on feed usage for the U.S. out of the corn crop. And I kind of feel like that number, once the calculation comes across here, when you look at the stocks reports here next Friday, which I'm kind of anticipating to be very similar to last year's numbers. At this point, we have been 75, as much as 100 million above that number. I kind of feel like we're going to come right back to last year's 1.3.8 billion bushels. Now, that's not a huge factor in the corn world, but I kind of feel like that it's an indication of the fact that the corn crop for last year might not be as big as expected. And to some extent, we're going to start more and more knowledge here about this year's corn crop as we go forward here. We've probably, I think, 7%. We were 7% last week. We moved up to 15% nationwide on corn harvest. We'll probably be in the mid-20s this coming week. From there, on corn harvest and that, but it's going to be real important what kind of yields we start to get from Minnesota, Iowa, the areas west of the Mississippi where the strain of this summer's weather, Missouri definitely, including Kansas, that's really going to be the swing areas out here as to what our crop size for the coming year is at this point. And if to some extent last year's crop was a little smaller, then that's another variation to look at what we could see on corn from that standpoint. The other couple ones, that are highly important, of course, in corn is the processing levels for ethanol. I think because of the crop last year was very dried down and what I call flinty, and that had a lot of carbohydrates in it, so we got a better grind of ethanol out of the corn that we had last year. The one thing that on processing you don't want is a wet spring, a soggy corn crop. You can't dry it down, that kind of stuff. Where you're it's poor quality for storage, all that kind of stuff. This year that wasn't the case, and so I think that's a positive. And also, interestingly enough, we had a late season pop in some shipments out there that the USDA acknowledged on the September report. And so put it all together there, I think there's a number that could be, it'll be watched very closely, but in reality, we'll be back watching the harvest and what the information is coming out on corn just as much and around the world at this point. Not just it will be a one-day response here, and then we'll be back looking at Argentina and what's going on in the Black Sea and what's going on our back porch here for U.S. yields on the corn. But boy, the beans have also had some interesting situations for next week.
Yes, and another thing to take into consideration is that there won't be any early harvest in the U.S.
Oh, now this weekend's for sure has got slowed down because of the some rain events that occurred here. Late week per se. Nebraska, lots of South Dakota, northern Kansas, and then definitely parts of Illinois had some pretty significant rain this week. Interestingly enough, Chicago didn't get much. I think my total for the week was something like 4/10 or 5/10 maybe, stretched out over 2 or 3 days and along the way. But we don't raise too much corn in Chicago, but I think that's part of the reason we got a little bit of a rebound going today, going into the weekend. That we had really kind of pushed everything down to some technical supports here, just below $13 in nearby beans, and in the 480, 475 zone in D's corn. And so we got a little bit of a I better cover some of my pre-hedge here because I might not get enough sales on that thing, and so I'll do it now instead of on Sunday night or Monday, which is, it's anticipating a participation in the markets and what it might happen, because right at this time next week's situation looked like it's going to become somewhat open, so I expect we're can struggle back and forth on corn again next week on price activity per se. I guess the real interesting thing about it is I don't sense that the producer out there is going to be really pushing a lot of sales here across as he takes it to the elevator or things like that. Right now, at least, I think he wants to get a better handle on what he feels like his yields are going to be, and to some extent, people in the Eastern Corn Belt will be watching what's happening in the West, because the West is where the biggest impact of this year's weather occurred. So reports we get out on those kind of things on the social media and things like that will be watched closely from all kinds of people, including myself, from the standpoint of how this crop is going to come together here. A 1.3 carryover stock for this year is an extremely heavy number, but at the same time, it looks like we're going to have a crop just slightly below, I say 15. So we're going to have adequate supplies on corn at this point going forward. Beans, a lot different story there. Even with the acreage adjustments we've had back here in September on the normal USDA update there, the 95,000 more acres of beans is not going to really switch that. It's going to really be what kind of yields we got. There's definitely things floating around out there. I think I sent it to you and other people about a a comparison of soybean seed sizes from last year to this year, comparison to a nickel, and that was pretty startling. As that was from Northeast Iowa, and that was one of the drier areas of the country from there, and that's also going to play into our soybean stocks or soybean numbers as we go forward here.
Yes, and but you hardly mention wheat today.
Wheat's it's been somewhat disappointing in the fact that the world has really given up their seasonal ideas on wheat. We haven't really been paying attention to the issues in the southern hemisphere here on the impact of what El Nino might have. The Argentine crop is still struggling to really get itself established here after coming out of dormancy. Same thing going on in Australia. They're a lot closer to the equator, so they're really not worried about that so much, more than they are the fact that they need more rain from there. And then India's going back and forth in the history of what their potential crop might be. It's more into next year than what they've really got available right now. Their prices internally have continued to be pretty strong, and they've been trying to push supplies into the marketplace to slow it down from there. But and also it's interesting in the fact that wheat is planted in the U.S. from the southern areas traditionally up to Nebraska and the northern areas, both in winter on its winter wheat seedings. Last year we had a very difficult time getting some areas of Texas and Oklahoma planted until real late. So that won't be the case this year on wheat. But it's a situation that's important to that important to that particular market. And right now, the Russians seem to be continuing to muffle price enthusiasm out of the Black Sea. They're willing to sell it to anybody, and they're not really. Most of the tenders these days don't seem to be officially out there like they used to be. They're just the Russians are more than willing to give a deal on the sidelines. So that's part of the reason the wheat market is somewhat seasonally, at least, not as firm as it traditionally is between September and November. Usually that's a time when wheat prices are trying to monitor all these weather conditions and get some supplies out of the producing countries into the world supplies ahead of the North American winter and transportation issues and things like that. Nothing's happening in that world from there. But the one thing on the soybeans, we don't want to slip on that one, is the fact that the the latest numbers from NOPA kind of suggested that we're going to end up having a slight reduction of the USDA's crush statistics from 2.22 down to 2.215, a 5 million reduction. But at the same time, some of the late export numbers that came here for August and things like that suggest that we might still have another 5 or 7 million worth of extra exports, even higher than the 5 million the USDA found back in September 12th from there. But the real thing that continues to be something quite interesting is the statistics of the stocks, as we've seen through the year here, haven't had their kind of declining amount of residual level. It's really been stuck up here in the 155 million bushel level, both in March and June. And that really makes me nervous that that we could see some type of 25, 30 million smaller stocks than the USDA's 250 million they have right now. Now that's with harvest on and things like that. That's not really a superstar star thing situation, but it gets back to the reality that maybe when you do that, the USDA is most likely going to have to make an adjustment on last year's crop, bring that yield down a little bit further. That puts the trends on yields a little bit more subject to the downside, all those types of things. So the soybean side of things also have had some pretty wild switches here over the last 4 or 5 years, from 70 million bushels lower than the trade expected. I think it was like 3 or 4 years ago, and then at the same time 2 years ago we had it 80 million higher. So normally when you end up going through the year, those stock numbers kind of stay pretty within a closer level, but that hasn't been the case here in the U.S. and both corn and beans over the last 5, 6, 7 years, where these numbers have been more erratic. Now, there's been terrible weather situations, poor quality crops, other things along the way that have made it difficult to know where your stock numbers should be. And I think also to some extent, the producers out here have had the same situation with test weights and quality and things of that nature. But at the same time, that makes this stocks reports a little more of a exciting report. In the past, they were kind of a snoozer at this point. Oh, and by the way, you're talking about that wheat. We also need to talk about there's a small grains report that's going to come out next Friday. That particular report is really going to be updating the spring wheat and durum crops. The winter wheat number is pretty well set at this point. I'm kind of really anticipating another probably 20, 25, maybe as high as 27 or 30, 28 million reduction in the crop of spring wheat. Coming out of North Dakota, weather-wise, it's been pretty dry up there in some places, and also Montana. There's a certain amount of spring wheat that's produced in Montana, and those two states are the two biggest producers of spring wheat. And so I sense that that might be a feature that will be also out on the 29th. But we're got lots of things flowing around in the grain world these days. So
yeah, we are going to discuss again when the report is out.
Yes, that's the next Friday. One thing that's going to make it interesting, and we talked about the cattle industry and its impact on corn here this today, and we did end up getting an update here today on the August cattle and feed report. And it turns out that we had the trade was looking for about a 93.5 placement versus a year ago. And it turned out to be 1.5% higher than that. Primarily because we're looking at record beef prices. I expect you see it in your meat departments just like I see it here in Chicago. And the marketings, they were anticipating them to be closer to 94.7. The number that came out today was closer to 94%. So that combination of slightly higher placements and a little bit lower marketings did advance the the cattle and feed number on September 1 up to 98%. So to some extent, that's positive about what cattle, for potentially bigger supplies down the road than they were looking for, but it's still lower than a year ago, and it's going to continue to be lower than a year ago. So I don't think I'd anticipate any big price decline in beef in the U.S. This situation is going to take us probably another 2 years or more to get worked out and be able to get more get more cows, cows, and then also feeder cattle out there and get them back into the feed yards down the way. we're going to be sitting here with some pretty expensive beef prices for the next 2 or 3 years, to say the least. But it is we still have something to chew on to put on our barbecues.
All right. Thank you very much, sir.
You bet. Have a great weekend. And next week's going to be the first of some interesting reports here on the stocks and U.S. wheat production, and then what we get in the October production report. I think that's going to be our first one when we're going to have some good data to work with. But let's all look forward to a nice weekend here in the East, except you might get a hurricane again. Isn't that possible again? So whizzing by you guys?
Yeah,
Jesus,
yeah.
you've got too many of those. I tell you, I'm glad I'm hanging out in Chicago.
All right. Thank you. Bye-bye.